All right, we did it. We're live. Imran, how you doing, man?
I'm good, man. How are you?
I'm bored. No, I'm just kidding.
Yeah, I know. Crazy day yesterday, huh? Crazy
I feel
day.
like I run 5 marathons in 2 days. It, it's great when you're trying to produce content and write about markets and trade. These are the things that are fun when you get a lot of movement, and so
Mm.
I'm grateful for that. But we got a lot to cover here, namely the 50 bips cut, the huge options expiration lingering tomorrow, which is why we're here doing our monthly show.
Hmm.
And then not too far ahead is this election, and it's a weird time here in the States in regards to that. So um,
Yep.
before we kick it off, man, how are you doing? What's catching your eye these days?
Um, been trading the VIX a fair bit, so managed to get long for that expiry print. Like back in August, we got really short, and that worked. And then we're trying to run that short. Probably ran that short a little bit too long. Started throwing the towel on it, and then thinking like the overshoot last week, VIX had kind of gone down a little bit too much, and I was like, you've got FOMC, and the FOMC is being priced as a 50-50. So why the hell is the VIX going to be at 16 going into it? It didn't make any sense
Yeah,
to me. So it made sense the VIX popping to like 18 and a half yesterday. But obviously, it is resetting a little bit now. But now that the September VIX has rolled off, October VIX is your front month, right? And we have a very interesting dynamic now because
to say
normally,
the least.
yeah, to say the least, but normally you have this roll down function, right, in the VIX futures because VIX futures trade at a premium to VIX spot
Hmm.
by maybe a couple of vols with a month to go, right? And that couple of vols decays through time as the future, which is a forward vol, rolls down into the VIX spot. Okay, and that's like an embedded decay that you pay when you go long VIX. You can't do that now because it doesn't work like that now because as we get through the end of September and we go into early October, which is only a week or two before the VIX expiry, that 1 month window that is the VIX spot that the VIX spot represents is going to capture the election. And so
Mm.
that's going to be worth an extra few vol points than what it normally is worth, right? So instead of the VIX spot staying where it is and the future rolling down towards it, you're going to have the opposite. You're going to have the future kind of staying where it is and the spot's going to roll up towards it, basically, right? So it's like really different because of this event volatility that is priced.
Yeah, you bring up some incredible points that are likely to catch a couple of traders, and I guess what I want to start with, there was a note out today from Goldman saying that they felt maybe the VIX was a little too low, given some of the things they're seeing, seasonality and the like. And what I think was kind of interesting is we showed this yesterday in the founders note, and related to this, what was interesting is, to your point, I can't remember a time where there was that much uncertainty into the FOMC. Like, granted, it wasn't like, are we getting a cut or not, but like how big the cut was.
Mm-hmm.
And so this is the 1 month skew into yesterday's FOMC, where teal was yesterday morning. So vol was higher, at least the wing was a little bit. The downside wing was left tail, whatever you want to call it, was higher. But at the money was fairly stable. But at the money was like around 14 and a half for 1 month options.
Mm-hmm.
And realize is like 14, and you start to go kind of to your point of like you're really trying to thread like a vol needle here, I think, uh with these levels, because we're very quickly going to go into the election, and regardless of which side of the aisle you fall on, we're all probably expecting there to be some weird stuff happening around the election, just in terms of like the odds that it just goes off nice and smooth and there's a decided winner and a decided outcome and we're all good. Like, I don't, I really don't know how we, like that. It seems like you got to hedge that event, and that commands that extra vol that you're talking about. So, we had what seemed like vol that was just a little bit too low, going into the event yesterday. And then we saw, and this is granted is more short-term than what you were talking about in nature, but the number of moves yesterday after 2 p.m. that were 50 bips or greater, I don't know that I've ever seen that much movement. You know, it was up 90 bips, down 70 bips, up. I counted 8 moves that were bigger than 50 bips in the last 2 hours of trading, which is just kind of bananas. So like, yes, people are like joking, like, yeah, you sell the straddle and like you would have won, right? But like you would have sold that, been short that straddle, just like, you know, throwing up every minute because the market just keeps ripping all over the place. And then what we find out related to this and kind of related to liquidity and vol and everything else is, you know, I don't know how many options usually trade in any given minute, but this is from the SIBO. They said that 1 million contracts traded in the first 2 minutes after the rate cut announcement, which just seems like a bananas number. I mean, I can tell you that, you know, you had about 16 million spiders trade so far in September, I think, is as of Monday. And so, you know, you're talking 250,000 contracts trade in the first 2 minutes on what was just kind of this equity market pump that gave way immediately. So my point is, kind of to your point, is there is a lot of reasons for vol to stay bid, I think, in this market. Some are flow related and others are related to events.
So apparently we're not live on YouTube. That's what I'm hearing. But I don't know if you're getting that. You're hearing that as well.
Check. I do see us streaming there on YouTube. So I see us on the Twitters.
Okay. That's what
yeah, let me check.
Got text saying that. So
okay, let me check. All right, I'm working on that, Imran. But some good points there on vol. We'll get the technical pieces sorted out for everybody. We're definitely live on Twitter, so we're rolling with that for right now, and we will update that as we go. So, anyways, so let's turn to this, Imran. We get the 50 bips cut, which, you know, there was a fair amount of uncertainty around that. There was a lot of volatility around it, right? We had a 1.5, almost 2% equity rally. That's a realized vol of what, 24 roughly. Which, you know, is that going to persist into perpetuity? Probably not, but still that's volatility, right? And so, you know, that's another reason that, you know, just kind of helps vol hold up a little bit, at least realized vol.
Yeah, I mean, I would say it's really, this was a super interesting FOMC, right? And the reason being was the way they leaked the 50. And the fact that it was a bit of a panic, right? Like they were like, in July, yeah, we're chilled. And then it was like a few not so great jobs prints. And now they're crapping themselves going, what are we going to do here? We better leak it and do 50, right? So I guess my takeaway, first of all, I was very confident they were going to go 50 after it got leaked. And that kind of took the advantage in terms of the probabilities in the rates market pricing, because once that move happens in the rates market and you go to 60-70% for a 50 cut, if you don't deliver the 50 cut, then you are tightening financial conditions at the same time as cutting rates, which is the opposite of what you're trying to achieve. So it was like they were backed in a corner. They had to go 50 once the market basically listened to them, the leak, and priced it. It was like, okay, that they would only be doing that leak if they were going to go 50, and therefore they went 50, right? So that was a no-brainer. But the thing that I think is interesting is just that the fact that they could make that U-turn and feel the need to make that U-turn so quickly suggests that, wow, you know, they're reacting to the data in quite a meaningful way, right? And so it's like the volatility of the economic data and the impact that has on the Fed reaction function has been seen recently to be quite dramatic. So that in itself is quite supportive for volatility, right? Even if there was no election whatsoever and there was no seasonally weak period for markets that we're approaching, just without that, the fact that we are seeing the Fed reacting like that and kind of having to pivot that quickly makes me think, okay, that's probably supportive to vol in general. But then you add into the mix that you've got earnings season coming up, you've got corporate buyback blackout, you've got a seasonally weak period of late September to October, and it's even more seasonally weak because it's an election year. So people generally de-risk ahead of the election, and then they go and pile back in for the year-end rally after the election. You add all that together, I mean, I think you're looking at VIX at 20 plus, right? I don't really see how by October expiry we haven't seen VIX go higher.
Yeah, that it's hard to disagree with that thinking, I would say. And, you know, the options positioning right now shows that some decent positive gamma came in above 5,700, which is supportive, but under that, things are still pretty fluid. So to your point, I think there's a lot of perceived safety here in the short term because of the 50 bips cut, but it's a it's a little bit of a struggle there. I need to pause right here. If you are on YouTube or waiting on YouTube, the channel did get a bit messed up, apparently, the link. So Imran, I think what we got to do real quick is, I don't want to pause it and close it out, but if you're hearing this, just go to SpotGamma, youtube.com/SpotGamma, and you can catch the live feed. Hopefully that works. I don't want to restart the whole feed here. We'll see if that can get things sorted out. Yeah, so we're missing the